All right. Well, welcome everyone tonight. I'm glad you could make it. I'm sure we'll have a few more people joining us as the early minutes pass here. I'm glad you could be here. Beth is from Colorado Springs, and she was ecstatic that she didn't have to drive up to Parker tonight. And so we decided we could still do this event tonight and do it via Zoom, especially since last time when we did a presentation the end of September, we had 84 people on Zoom, and we literally had 12 people in the room. So I figured, why not? Let's just do this on Zoom. So I'm going to let Beth take it away. And if you have any questions or anything during the presentation, feel free to put them in the chat and I can give them to Beth.
Terrific. Thank you, Denise.
You're welcome.
So, hey, welcome everybody to Never Pay Retail for College. My name's Beth Walker. I wrote a book, which I'll talk about in a minute. I'm the founder of the Center for College Solutions, which is a collaborative coalition of professionals dedicated to making college affordable for all families. And I'm the mother of a college freshman. So yes, in a pandemic, there are kids that are in college. So I have lived this dream right along with you, and I want to share with you what I've learned over the years. You should see on your screen a chart, 20 years of price changes in the United States. So this just goes back to 1998, because we just have the data through 2018. And what it really talks about is what things cost in our consumer-driven culture in terms of goods and services over the last 20 years. And, you know, it's no big surprise, televisions and a lot of things driven by technology like cell phones and computers, on an inflation-adjusted basis, those are actually less expensive now than they were 20 years ago. Couches, clothes, and cars, pretty much the same, kind of straight lined. Again, pretty much the same cost adjusted for inflation. The things that have skyrocketed, no surprise, visits to a hospital and sending kids to college. College tuition, college textbooks, anything related to college is just a whole lot more expensive. And so I remember the first time I saw this chart, it brought to mind Mount Everest. It is just a huge challenge for all of us. And that's really what I wrote about in the first chapter of my book. As parents, we are about to embark on a personal financial trek up Mount Everest. And we find ourselves looking for that experienced Sherpa, and that's me. I've been doing this since my son was born. Literally, when he was born, I did the math on what it was going to cost me to send him to school. And my husband and I were like, you got to be kidding me. When did this get so expensive? And so having looked at this since he was a baby, okay, I, in 2017, wrote a book called Never Pay Retail for College. And what you see on the screen are these boxes, red, blue, and golden. And those are the 12 critical components of a successful college project plan. It took me 17 years, 18 years to figure this out. And I really want to share this with other parents, because at the end of the day, we all have to be better consumers of higher education if we're going to make change. If we just continue to send our kids off to school and blindly follow what they're telling us, we are not going to change the outcomes. College doesn't need to be a runaway freight train in terms of cost. And in the college project plan, there are 4 distinct components that the student has to own and be responsible for. There are 4 distinct components that the parent has to own and be responsible for. And then there are those 4 components in the middle where student and parents have to collaborate to create a better outcome. And I really want to talk about that because they're broken into some specific areas. For the students, the IQ components, the things that really deal with academics, I think are very well addressed by high school curriculums. the unweighted GPA, the standardized test scores, the admissions applications and essays and letters of recommendation. I think that high schools today in general do a good job. I think Lutheran High School in particular does a very above average job. I do this for people all over the country all day long, and I get to see the results from lots of different high schools, and you're very fortunate. I know that you're paying to send your kids to school there, but they're very committed to them being successful. So the IQ piece of this is big. I also think that you can feel good about the fact that the high schools are paying attention to that. The emotional, social piece of it is an area where I feel that all parents are likely having to supplement the efforts of the schools, because really, it's not the job of the school, or the curriculum isn't designed necessarily for those kids to really understand who they are, how they're hardwired. Again, you've got a few more tools at Lutheran that allow you to do that. Denise and her department use Naviance better than almost every high school I've ever met. They actually use the tool and encourage the kids to use the tool. But knowing why you're going to college, stepping on campus with a plan and a sense of purpose, realizing that the job that the student has is to go get a degree as opposed to have a degree given to them, get in and out with a bachelor's degree in 4 years. Those are those EQ components that can have a huge impact on the overall cost, which leads me to the FQ, the financial intelligence surrounding college. And they correspond largely with the role of the parents. Parents have to understand where they're starting this process, and I want to help you with that tonight. You need to know what your EFC, expected family contribution, is before you even think about creating a budget for college. You need to understand what role financial aid is going to play in your overall strategy for paying for college. You need to know, am I on track for retirement? And if I'm on track, how do I back into my budget for college? The reason that's so important is because kids can get scholarships and loans for school. You're not going to get scholarships and loans for retirement. So we really do need to approach this project with a budget, with a game plan, knowing how we're going to pay for college, all kids, all years, adjusted for inflation of costs. And think about it this way. What is every parent with a college-bound student or students trying to do? Number one, they're trying to maintain their current lifestyle. We like the houses we live in and the cars that we drive and the vacations that we take our kids on, the memories that we make with them. We want to keep that intact. We want to make sure that we do stay on track or get on track for retirement. And then along comes this thing called college, which is a very short-term, very expensive thing. So juggling those three priorities simultaneously is the challenge. And those are things that we can be much better at. When we think about college, your category of aid as a household should really drive your planning priorities. If you're a category 1 household, which means your expected family contribution is always less than the cost of attendance at any college that your student applies to, that means you'll always qualify for need-based financial aid. If that's the case, then you want to protect and optimize your aid eligibility. Many of you participating tonight are going to be in category 2 or category 3. What does that mean? Category 2, sometimes you're going to qualify for need-based aid, sometimes you're not. So your number one priority is selecting colleges that tend to be generous to students like yours, that discount the cost, that are going to reduce your overall cost of attendance. Sometimes when you have 2 kids in school at the same time, maybe you've got 2 or 3 years in age difference and in school difference, You may be eligible for more aid when the kids overlap than when they're in school singly. And then, of course, the category 3 household means you're highly compensated executive, a business owner. You're never going to qualify for need-based financial aid. And so now we're going to look to the income tax code and see if we can create some tax scholarships, some ways that we can redirect money that may have been headed to the IRS or the Department of Revenue in Colorado, and now we get to direct it toward the school of choice. We need to understand college math, so I want to explain that to you. Here's the formula you all need to understand. COA, cost of attendance, minus EFC, expected family contribution, equals need or unmet need as far as the financial aid department is concerned. So let's unpack those terms. The cost of attendance at every university is kind of the whole enchilada. If you type cost of attendance into the search box of any university's website, it will pop up a schedule: tuition and fees, books, room and board, transportation to and from the campus, miscellaneous expenses. They will tell you what the cost is to attend for that school year. From that, you would subtract the expected family contribution. Now, where does that come from? When you file your financial aid forms, either the FAFSA, free application for student aid, or the CSS profile, which is authored by the College Board, used by about 250 private universities across the country, they're going to take information from you: parent income, parent assets, student income, student assets. They want to know the age of the oldest parent, the number of people in that household, and the number of people that are going to college full time. From those data points, they're going to calculate your expected family contribution, the minimum out-of-pocket cost they believe your household should be paying for school every year. And having done this for 18 years, I can tell you it's a lot higher than you think is reasonable, okay? It's a very income-driven formula, and so it catches a lot of people off guard. And it's that math, the cost minus the expected family contribution, that equals what we call the unmet need. And that need number is what the financial aid officer at the school concerns themselves with. They're not going to address the EFC at all. That, from their perspective, is your responsibility. But whatever gap exists, if it exists, now they look to see, what do I have to award this household? Is it a student loan? Is it a subsidized student loan? Is it a parent loan? Is it a work-study program? Do we have any scholarships for need-based candidates? That's all need-driven, okay? What's important to understand about that is that doesn't even happen till January, February of your student's senior year. And that has nothing to do with merit-based aid. Merit-based aid is gift aid, meaning it's free money. It doesn't have to be paid back. It's not lent to you at interest. It is determined based on your student. What is their GPA, their test scores, the strength of their high school curriculum? Are they an athlete or a performer or a musician or an artist? Is there something about that student that is of merit to the admissions committee for that year at that school? Could be geographical diversity, could be gender diversity, could be racial diversity. There's a million different things, but what they've told us year after year after year is 85% of their decision: unweighted GPA, standardized test scores, strength of high school curriculum. Now, what's interesting is in a COVID world where some of these standardized tests can't even be given or taken, they're wondering, oh my gosh, we've always relied on that as a measuring stick. What do we do? So they're all struggling with that. And that's something that we just have to be prepared to deal with. But those criteria help the admissions folks decide, is this the type of student we want to create a discount or incentive for them to come to our school? Is it a chancellor's scholarship, a trustee scholarship? That gets married to the need-based aid in that February, March timeframe. So don't assume, just because you're not going to qualify for a lot of need-based aid, that you shouldn't apply to a school that has a high sticker price, because your student might be eligible for merit-based aid. One other thing before we leave this slide that I want to drive home. State universities in general have less money to create discounts and incentives. They're only going to meet 50, maybe 70% of that unmet need. They're not going to close the gap entirely. Private universities who go out and raise their own money and their own endowments tend to close the gap to a higher percentage, anywhere between 75 to 100%. So sometimes it pays to apply to those private universities that have those outrageous sticker prices, because kind of like when you go to a new car lot, if you're a savvy consumer, you're not going to pay that retail price. It's all about finding the right fit. And that's what I want to talk about next. When we think about this slide that you see in front of you, which is nothing more than a personal economic model. It looks like a plumbing system, and I understand that. But it's really a function of the way money works in everybody's household. You go to work to earn an income, goes through this huge tank called lifetime capital potential, only because you will create millions of dollars worth of income in your lifetime. The problem is it doesn't sit there. It comes to you in every other week, once a month paychecks, and it hits that doggone tax filter, which you'll notice is bolted on. Then it hits the lifestyle regulator. And that's where you're making some important decisions about how much energy and effort you're going to spend to redirect money up into this future lifestyle tube, into savings and investments for your future lifestyle, and how much is going to flow through into your current lifestyle and be consumed and gone forever. You'll notice that things like houses and cars and education, that's part of current lifestyle. It's not part of your future lifestyle, which could also be called retirement. So understanding how money really works in your world is critical during the college years, because again, we're trying to maintain our current lifestyle. We're trying to fund our future lifestyle, and then along comes college, and we've almost hit not a speed bump, but it could be a tsunami, it could be a brick wall. And so being a smart consumer and knowing how to pay for that is important. Where all three of the pillars of a good college project plan come together, IQ, EQ, FQ, academics, social emotional fit, financial fit, it all comes together in the area of school selection. And you'll notice that regardless of category of aid, it's either a number one or a number two priority. This is a place where I think most families make the biggest mistakes. And this is where tools like Naviance and the guidance department team can really make a big difference for you. Choosing schools where your students are likely to get a discounted cost is critical. And it's important to understand the way the business of college works. Just like pre-pandemic, the airlines and the hotels had membership programs and discounts, colleges use dynamic pricing algorithms to determine what people are going to pay. You know, used to be when I would get on a plane, the person to the right of me and the person to the left of me, we sat in the same row, but I bet none of us paid the same price. Depends on when we bought it, if we used points, all kinds of different factors. Well, the colleges operate under the same principles. And the irony is this: when you as the family fill out those FAFSAs or CSS profile, the colleges are assessing your ability to pay. And when it turns out that you're a category 2 or category 3 household, meaning they estimate you can afford to pay most of it or all of it, they actually may be more generous to your students if your students show up in the top 25% of kids generally admitted to that freshman class. Top 25% as defined by GPA, test score, and strength of high school curriculum. So think of it as a theory of relativity. If you apply to Stanford or Harvard or Princeton, guess what? Everyone's brilliant. Everyone has great test scores. Everyone took honors and AP and IB courses. They're all smart. So it's not going to work with elite private schools. But if you go to just the next tier, it makes a huge difference. Great schools that may not be brand name recognized, but hit on all cylinders in terms of IQ and EQ fit and begin to emerge as winners for the financial fit. We have to be very strategic. Now, your biggest nightmare is you're waitlisted. So the kiddo gets in, but they're in the bottom part of the class from a GPA, test score, strength of curriculum. And so they'll let you pay retail, but you don't want to go there. And so the art of this is finding schools that are a great fit for your student, but they're also a great fit for your bank account. And so how do you do that? And what happens when you do that? Here's a perfect example. This is a student that applied to Denver University. It's a private school. Their advertised sticker price last year, $70,000. And so many families would have said, you can't apply there, we can't afford it. Of course you can't, nor should you. But they liked this student. This student was one that would fit in their top 50 or top 25%. So right off the bat, they offer them a chancellor scholarship for $24,000 a year. Then they added a residence hall grant for another $3,000 a year. So $27,000 of merit-based aid, renewable, free. Then they added the need-based component, which was the student loan. And today, student loan rates are 2.75%. 10 out of 10 parents come to me and say, Beth, I don't want my kids to graduate with student loan debt. Okay, I get it. But what if we had a paradigm shift? And what if I said to you, let's not view this as student loan debt. Let's view this as a low-cost financing source for the household. Mom and dad, where can you go today to borrow money for 2.75%? It's not so simple. So let's take the loan and then mom and dad can pay it off after the kid graduates over a 10-year period of time, building the student's credit right out of college by depositing in their bank account and then having the loan servicing company take the payment. That's a win-win for the whole household. So this family took a $70,000 a year college, could find a way to discount it with an out-of-pocket cost of $33,452, close to in-state for Boulder, close to in-state for Colorado School of Mines. Interesting. Okay, let's take a look at another school. Again, advertised sticker price, $58,000, but they liked this student enough to say, I'll give you a presidential scholarship. I'll give you a business fellowship. I'll give you a discount of $15,000 right off the bat. Of course, I'll throw in the federal student loan because guess what? If you fill out the FAFSA, if you fill out the CSS profile, you qualify for student loans. You qualify for parent loans. There is no, oh, you make too much money for that. If you do the paperwork, you've made your application for that, okay? So again, may not be the cheapest, may not fit everybody's budget, but what started out at $58,000 ended up just over $37,000, much different. And now we work on a cash flow plan. How are we going to pay for that while maintaining our current lifestyle and staying on track for retirement? These are just two really simple examples of schools that provided deep discounts because we were finding schools that were a good fit, IQ and EQ for the student, but also a good fit for the bank account. Now, how do you do that? We have tools in Naviance. We have tools that we use where we enter the GPA, we enter the classes that were honors, we enter the test scores, we look at how do you do on typed papers? Have you demonstrated interest? And the guidance counselor department at Lutheran can talk about demonstrated interest. How do I let these colleges know and leave an electronic footprint that I'm sincerely interested in you as a college? Have I participated in state, national arts, math, science, or language competitions? Have you been a leader? Have you had volunteer experiences? Have you received any recognition, state, regional, and national in any areas? Any varsity sports or travel clubs? Any performing arts? Have you worked and gone to school at the same time? And then, of course, what is the expected family contribution? This is just a tool that gives us what we call a CAP score, a college admissions probability score. And with this score, we can run a list and we can, add, subtract, select states. We can filter through and say, hey, this student based on this score is likely to be admitted, or they'd be an ideal fit, meaning they're in the top 25%, which means we're increasing the odds that you're going to be offered discounts. Is this a little more work than when we all went to college? Heck yeah. It was never this complicated because it was never this expensive. But you're about to make a 6-figure decision for each kid. So if I stepped back and I said, all right, let's take our parent mindset and set it aside and put our consumer framework on. And I said, you're about to buy a house, at least a vacation home. If you've got 2 kids you're putting through school, you wouldn't hesitate to look for the best financing options and the lowest monthly cash flow strategy available to you to do so. Or if I said to you, hey, you're going to go buy 4 to 8 cars because a year of college is like buying a new car, you would take an entirely different approach to financing it. But what happens is, as parents, we're not thinking about that. We want a great, safe place where they're not going to take our value system and throw it out the window, and give them a great education and get them launched and on a path in their life. So we're looking at this so emotionally. But if we really want to be good consumers of higher education, we've got to go about it differently. So if somebody said to me, hey, Beth, of the 12 critical components of a successful college project plan, if you had to pick one, what would be the most important? It's the schools you decide to apply to. The cake is baked when you create that list. Because if you start with a bad list, it could be heartbreaking, it could be bank breaking, and it could end up not being a great experience. And there are over 3,000 schools that can award a 4-year bachelor's degree. We can find 8 to 10 that are worthy of your student's application that fit IQ, EQ, and FQ. Now, how do you go about this? It's a project plan. It is a multi-year project plan. Fortunately, at Lutheran, they're going to be very conscious of where your student is in the project plan. But for you, it's as easy as 1, 2, 3. Number 1, we have a phenomenal tool that we're going to allow you to have access for free. No strings attached. It's just a way for you to get a little bit more breadth and depth on this college project plan. So it's called the Strategies for College Learning Center. All you have to do is type into your browser my first name, Beth, followed by a period, then SFC, Strategy for College, learningcenter.com. No cost, no obligation, just arm yourself with more information. Next, I always, when I do a workshop for Lutheran High School, I will give you a 30-minute consultation for free. This is a hyperlink. You can write it down. I think there's going to be a recording. I can send this to Denise. She can send it out to you if you want it. It just allows you to opt into my calendar at a time that works for you for a Zoom session. And we'll spend 30 minutes figuring out where are you in your college project plan. And I can help you understand, hey, what are the areas you need to be focused on right now based on your situation? Because a lot of this is really good general information, but sometimes you have specific questions that are unique to your household, and we can help you get started. And then think of me as part of your board of advisors. You can send me a quick email. You can give me a call. You can visit my website. This is my son and my husband when we dropped him off in August at High Point University. But I am here to be a resource to help you as you navigate through this process. It doesn't have to be overwhelming. You've got a great guidance counselor department at Lutheran High School. Use your resources. The Naviance tool is phenomenal. And you can just be a lot smarter about never paying retail for college. So that wraps up the formal part of this presentation. Denise, do we have any questions that have come in that I need to answer?
No, not yet.
Okay, well, that's good. Maybe no news is good news.
Yeah. Well, I will add that for the parents that are here, your students have a Naviance account. Parents do not have an account. So your student's Naviance account has a feature on it called Super Match. And you get to choose different criteria that are important to you as the student or as the family. And then you can do a search by state or by region of the states, and it will pop up different colleges that would match that or and fit those criteria. So that's a good place to start. And then from there, there's links to all of those colleges. So you can go to their websites. You can do their virtual tours before you would pay to go on a real tour at the college. So there's all those things that you could take advantage of. So we do have a few questions that have popped up. Colorado does not currently allow 529 fund to be used for student loans. Do you see this changing in the near future?
I think a whole lot could change depending on the outcome of the election as it relates to school. So yes, I also think, it also, Colorado also doesn't allow us to take a distribution from a 529 to pay for private high school. So I think we need to do a better job as citizens lobbying for what we want. I'm optimistic that they're going to become more generous, but you're right. That is not an option in our state right now.
Okay, Beth, could you go back one slide to show them the link to schedule the consultation for you?
You bet.
Thank you. All right, and then the next one is the expected family contribution a per year number or for the whole college career?
Thank you for that question. It's a really good one. You need to file the FAFSA or CSS profile every year. It is a per year number. Now let's just understand what gets updated from year to year. Generally speaking, because it deals with parent income, parent assets, student income, and student assets, people's incomes change, people's assets change. And so we're asked to update that year to year. A couple things to understand about the timing of that. For a high school senior, you want to file your FAFSA or CSS profile or both by this time senior year, mid to late October. The actual window to begin filing is October 1st. It's a new software release every year. I always like to let them work the bugs out a little bit. So if you get it done, by the mid part of October to the mid part of November, you're in pretty good shape. Now, a couple things. When your student is a renewing student, meaning my son, he's a freshman this year in college, his deadline isn't as early. It goes later, December, January, because the priority for the financial aid offices is the incoming freshman class followed by the returning students. You will also use the prior year tax return. That's the language they use, prior year, meaning if you have a student that graduates in 2021, You subtract 2 years, meaning you would use the 2019 tax return. Well, a lot changed with the pandemic. People lost jobs, people were furloughed. So what happens is you have to use the prior tax return to file the forms. But if your circumstances have changed, death, divorce, disability, loss of job, change of job, any of those things, inherited money, big loss of money, then you will file an appeal. There is a formal appeal process at almost every college. It allows you to say, hey, I filed exactly as you asked me to, but my circumstances have changed. And the appeal process allows you to communicate what those changes have been. I think you're going to see the financial aid offices overwhelmed this year and next year with change in circumstances. So they'll take just a little bit longer to work through the appeal process, but there's actually a term called professional judgment. And that is what every financial aid officer has that allows them to set aside the normal rules, evaluate your change in circumstances, and make a different determination. So just know that there's a formal process for you to follow when things aren't as they seem by using the prior tax return.
Okay. What is a good rule of thumb for expenses per year besides what is paid to the college for tuition, housing, books?
Tuition, housing, book.
Well, like I think the question means for additional expenses,
Right.
which in my estimation would be like travel. Like if I was going to Hawaii, well, how many times am I going to be coming home and flying back?
Right. Yeah, and then it's really going to depend on your student. One of the areas when we're talking about cash flow for college that we often identify are places in your lifestyle where you're already supporting your student, whether that's orthodontia, club sports, expensive outside hobbies, certain eating habits or diet, or, you know, a lot of those things are going to be redirected toward the school and handled at the school. Some of them won't be. And so it's probably a good idea to figure out, you know, what does it cost me for this kid to live in my house? And really look at it from that standpoint. It takes a first semester for sure for that to shake out and for everybody to kind of understand what the new normal is. But that's really largely dependent on the student.
Yeah. Well, one extra I can think of that would be parking. So if a student would take a car, some places charge per semester $250 for parking, and some colleges don't charge anything for parking. So
Right.
it depends on where you go. Yeah. Okay, I can't answer this question, so I'm going to ask you, what kind of services do you offer, Beth, when you have a meeting with someone?
Well, the first 30 minutes, obviously there's no cost because we're just really trying to understand where you are, what your pain points are, and you know what's a logical next step for you. But we really offer services to address everything regarding the college project plan. So what does that mean? If it's cash flow for college and it's dealing with all the blue boxes and the parents, it's a very straightforward financial planning process that's deeply committed to figuring out cash flow for college. So it's not like an investment review. It's looking at, hey, should we have a higher deductible on our property and casualty insurance so that we save enough money in premium dollars to pay for books? It's a very detailed cash flow process. We have a process that's just for the student to make sure that A, they understand what they're supposed to accomplish in their junior year. B, we have test prep diagnostics. They can take practice tests and determine should we make an investment in an ACT or an SAT course. What kind of schools, what strategic schools, if we can't get the job done in Supermatch on Naviance, do we need help? Do we need to supplement what you're already doing at Lutheran High School to write essays for college or letters of recommendation or manage the college project plan, because we use a tool called College Planner Pro. It becomes the dashboard for the student. It's very similar, I think, to some of the tools that are available on Naviance, but perhaps with a few more bells and whistles. We've got assessment tools. We work with a career coach that is going to use a whole lot of assessment tools. And again, remember, you're fortunate in that you have a lot of these things at your disposal at Lutheran. So it might not be necessary for you. And then of course we bundle everything. So we've got packaged programs and we've got a la carte services, and it really depends on the family. If you've got student athletes, do we need to do marketing to college coaches? How do we go about that? How are we smart about that? So we have a variety of services designed to be able to check the box on every one of the 12 critical components. And not every family needs every one. So that's one of the things we could explore during our 30 minutes or in a follow-up conversation. So I want you to understand, yes, we have fee for services and packaged programs, but the 30-minute consultation is less about that and more about, do you have an idea of where you are? Do you know what your project plan should be focused on?
Okay. Last one, I think. My daughter has recently been accepted to Colorado School of Mines. On the admission letter, she was offered $5,000 per year scholarship. Should we push for more?
I love that question. As an in-state resident at Colorado College, if you can push for more, good for you. I don't know that the probability is high. I would tell you that if you've been accepted and been offered a scholarship at Colorado School of Mines and you're open to the South Dakota School of Mines, there's a very good possibility that it would cost you a whole lot less money to go to the South Dakota Colorado School of Mines, get an equivalent education, and save about $10,000 to $12,000 a year. And you would be able to use that acceptance letter with that merit-based offer as a bargaining chip with South Dakota School of Mines. That's my perspective. Denise, have you seen a different outcome?
No, I've seen the same. South Dakota School of Mines is much less expensive, and there's only a few types of engineering that they don't have that Colorado has. So again, depending on which one you're looking for, that'd be a good one to apply to still, and then do a comparison and talk with Colorado and see what they say.
Yeah, but their point of view is that the big discount is in the in-state residents discount, and so you just have to understand we have less negotiating room because we're in-state residents there.
Okay, so another one: do colleges take into account other private scholarships or financial assistance in administrating their financial gifts or aid?
That is dependent on the institution. Some schools will say, oh, you got third-party scholarships because you filled out applications and earned it, and we know that's not renewable, and so we won't have that work against you. Others will discount their own merit-based aid by the merit-based aid that you work so hard to get elsewhere. So it's very dependent on the school. Have you seen anything different than that, Denise?
Nope. Yeah. Okay. All right. Someone has their mic
Tommy,
open.
did you see that cute picture?
Interfering.
You sent me that one.
I think Tori's telling us what's going on.
Oh. Okay.
All right. Do you think that's the end of the questions?
I believe so. I haven't seen any extras. Yep.
Well, hey, I just want to thank all of you for sharing your Monday night. I know we compete with like The Voice and, other interesting news a week from elections. But thank you so much for taking the time. This is an important decision for your household, and we really appreciate your participation.
Okay. Anita, the answer to your question, what other states offer in-state tuition to Colorado residents? That would be the WUE schools. If you Google WUE, you will find a list of colleges that offer in-state tuition or near in-state tuition to Colorado students.
Western Undergraduate Exchange, Regional Reciprocity Program, so terrific. By the way, a lot of kids could go to the University of Wyoming cheaper than they can go in-state in Colorado with the WUE. They could go to Boise State. They could go to a ton of schools west of the Rockies. So that's a very underutilized program.
Yep. I've actually had three students already this year tell me they're going to Wyoming because it's way cheaper than CSU.
Absolutely. And they are building a beautiful $5 million STEM building. They've upgraded their business schools. I mean, that school, they, by the way, have the most well-endowed study abroad program. Who knows if that's going to happen anytime soon, in the United States of all state universities, which was a big surprise to me. But that's a sleeper. That is a very well-kept secret. So yeah. Anyway, with that, thanks everybody. Have a great rest of your week.
Bye.